let's just say a lot of hearts were broken in this transaction. You had HPS that we had initially reported tried to go public, now selling to BlackRock instead. You have a co-founder telling analysts this morning on the call that the reason was to really change the face of capital markets moving forward. How is this team set to do that if they can at all?
So let's go back and look at the firm that they're joining, BlackRock, one of the largest asset managers in the world, $11.5 trillion. But when it comes to private assets, especially in private credit, maybe irrelevant is too strong a word, but BlackRock was certainly punching below its weight. Now, with this deal, it is an important step both for HPS because it gets the BlackRock platform, but even more important for BlackRock because in the asset management industry, the biggest growth has been coming from the alternatives bucket. And within that bucket, private credit seems to be the most attractive pocket, at least judging by the money flowing into it. Even BlackRock strategists have predicted that this market that's already ballooned to about $1.7, $1.8 trillion could double by 2028. And that's a big step forward. BlackRock did not have scale there. It was going to be hard for them to do anything in an organic fashion. So this makes sense. They had to make a splash like this, and they've done that here.
So where does this leave BlackRock in terms of the league tables? Because so far the narrative has been BlackRock is racing to catch up. That's why it's making all of these acquisitions. But with HPS now, the alternatives business will actually be bigger than Carlyle. So how should we be talking about them when it comes to the industry?
And it's important that you talk about all the deals that they've done because it's not just HPS. If you look at what BlackRock has accomplished in the last 12 months, two of the biggest deals in the asset management industry, HPS, which comes with about $150 billion in private credit assets, but also GIP, which has $170 billion in infrastructure assets. Take that together, and BlackRock's private market assets have more than doubled just with these two deals in the last year. They also had the deal for Preqin, the data provider. So clearly they're making a big push. And I'd go as far as to say, back in 2009, the deal that BlackRock struck with Barclays to buy the index fund business and how that transformed BlackRock, this could have a similar transformational effect if executed well.
Transform them in terms of putting them as one of now the biggest issuer of ETFs, which also transformed the whole landscape.
Is there any concern, is there any regulatory concern here, especially considering the Texas lawsuit? I mean, even if it's only a passive custodian of, $12 trillion in assets, it still can obviously exert some kind of influence.
Look, we are heading into 2025 and a new administration, and who knows what policies they will bring with them. It will be unpredictable, and BlackRock certainly has been a lightning rod, at least for a lot of the big conservative players, especially with their push in the index business, with their passive ownership and the influence they were exerting. But this is in private markets. We haven't gotten the sense that this is going to face any real regulatory trouble, but it's hard to rule it out at this stage.
One interesting part of this, too, is BlackRock already has an insurance business that serves about $700 billion worth of assets for insurance clients. This helps bring them closer, but it's not the Apollo model where they bought an insurance company. One thing, though, to consider, I think, is when you say $4.5 trillion in private credit, you're talking about direct lending. How much can they broaden away from direct lending into other forms of private credit? Do we know about their desire to do that?
I mean, every pocket within private credit, however you want to slice and dice, is not just direct lending, is sort of what we're talking about in that $3.5 trillion bucket by 2028. So BlackRock would want to have a footprint in all of those pockets, and I think this deal will help them get there.
And let's just reflect on how many deals BlackRock has done to grown in this space. I mean, we're talking about HPS. You mentioned Preqin. You mentioned some of the other deals that they've done, GIP, for example. When does culture start to be a concern? Because that is just a lot of people, employees that you're trying to integrate into the machine that is BlackRock.
When does culture start becoming a concern? Yesterday. When you're talking about two big deals, roughly $12.5 billion, so about $25 billion worth of deals coming into BlackRock, it changes the face of their private markets investing business at a place which is a big force in public markets. But you also know, when you think about the private market investors, how they perceive themselves relative to public market investors is very different. They see themselves in a little more of an elite scale. So coming into a place like BlackRock, yes, they will operate with a little bit of independence and will be siloed off a little bit, but the gestation period is going to be fascinating to watch.